Now let's just go over one simple fact about price. Right? Let me show you something here. As price, we have the graphs on price. We have the x-axis showing the time. We have the y-axis showing the price. And in between all of this, you have price moving. Usually price never moves in a straight line here, nor does it move in a straight line like this, or like this for that matter. Price always moves in, price always moves in a diagonal. So obviously diagonal levels, trend lines are usually considered to be very effective. Fibonacci fans are based on nothing but trend lines. And let me go on another time frame and just show you that we use Fibonacci fans for a different purpose. Right? Now Fibonacci fans are nothing but fib levels. What we have to do, like in all Fibonacci levels, any kind of Fibonacci level, let's take this time zone itself, you have to decide on the correct place to start plotting your Fibonacci levels. What I would generally tend to do is, what I want to do always is identify the pivot points. That means I will identify the swing highs and the swing lows. These are what I call as pivot points, because it's from here that prices change trend. Learn to look at price action. Price gives you enough of clues. In this previous entire downtrend over here, you had all your highs going lower. Your highs were going lower, each and every high. Your lows were going lower. It's only after this that your lows started going higher. So this becomes the pivot point. So I look at this as a swing point. This I would classify as an impulsive wave. And I would be taking the lowest low from here, not this low, because you still have a low low. Your Fibonacci levels, whichever Fibonacci levels you're looking at, whether it's a retracement, whether it's an expansion, whatever situation you're using it, you should always plot your fibs on pivot points, places where prices change trend from, never in between. If you plot them an in between level, it will not give you the correct picture. So we are talking about the fans. Let's plot the fans. I would plot my fans from swing high to swing low. This is where I would ideally plot my fans. Now, if you look at this, let me zoom it inside. We have different fan levels. What I generally tend to follow is I have fan levels for a certain purpose, the 38, 38.2, 50, 61.8, 76.4, and 88.6. Now, each and every fan level has got a different purpose to it, but the most important one is the 88.6, which we will be concentrating more on. The base of today's topic is that. Now let's understand the fans. What generally fans do is, if you calculate the distance from the high to the low and divide that distance, say, by 38.2, or put a 38.2 part in it, it will come somewhere here. So what you do is you plot a fan going through the 38.2 level. That's what fans are. They are dynamic levels of Fibonacci ratios. They are trend line levels, if you can call it. As I said, price always moves in waves, so trend line levels become very, very important. Now, in between all of this, what we do have is simple thumb rules. We have 5 ratios, and we have 4 channels. I call them fan channels. Right? We can classify this as 4 channels. Simply put, the middle channel, if I take a line right over here, the 68-point line, so long as price is below this, it's still considered to be a downtrend. If it goes in the above 2 channels, you can say that the momentum has shifted. Mind you, it's not a change of trend. That's exactly what we will be looking at on the fans. Each and every level has a purpose. It's the 88.6 that we will be concentrating more upon. Right, let's remove this. Let me show you the effectiveness of the 88.6. Following up some trades on a live thing, let me zoom it onto the Euro USD right now. We use the Fibonacci ratios to determine an expected level of support resistance. Right, let's take it on a smaller term time frame. Now, where would you classify the swing points? I would classify the swing point, the last swing point, as these. These can be classified as swing points. Right? This is the place where price changed trend from. Price was in a downtrend, moved up from here, changed trend, moved from here. Now, in between these waves, as I said, in this wave, you have your highs going, your lows going higher, your highs going higher. From here onwards, your highs started going low. So we classified these points. Now, you can plot a simple Fibonacci retracements. Let's say we are somewhere here. Price has found support somewhere here. We need to determine whether this is indeed a level of support. Is price going to rally up from here like it did, or is it going to continue to the downside? Now, as traders, that is exactly what we are looking for. So when the euro went up and started moving down, we need to know whether it's going to find support somewhere or it's going to continue the downtrend, right? What we can do is, most of the folks use fib retracements. We can use the fib retracements to determine support. On the fib retracements, we can see the 78.6 price stop exactly at 78.6. It's a very, very important level. But your fib retracement does not tell you isn't there a distinct possibility the price could still stop at 78.6, move up a little, and still come down. You're really not sure. So your retracements will not tell you that. It is your fans which will give you that. If we plot fans on the same points, swing low to swing high, and if price stops within the 88.6 fan level, as I said, it's your 88.6 fan, which is the most important fan level. If it stops exactly at the 88.6, then the possibility of price moving up is pretty much high. Now this becomes the barrier. This is the filter to determine whether this move down is going to be a mere retracement or is it going to turn into a full-fledged reversal. 88.6 fan tells you that. If price stops anywhere above this, it doesn't necessarily have to stop at the fan. If it stops anywhere within the 88.6 and goes up, you can expect the uptrend to continue, or you can expect price to resume the uptrend. If you have a close of a bar below the 88.6, it means that the momentum has turned bearish and we can expect price to move down. Now there are certain thumb rules which we will follow, but the most important point, as I said, is your 88.6 fan is a very, very important level. This is the filter. So the topic of our webinar today is using the fans to determine the extent of a pullback. If it remains anywhere within the 88.6, it is a pullback. It is a retracement. If it gives you a close below the 88.6, it is a reversal. That's as simple and plain as I can put it. Right? Now, let's consider the options. If you have price stopping right exactly at the 88.6, or let's say even at a 76.4 fan, even a 61.8, and starts moving up, we can expect price to resume the uptrend, and we say that, okay, we are looking at bullish moves right now. Taking this particular example, what happens when price breaks the 88.6? That is more important. When price breaks the 88.6, what do? As traders, something which I've always maintained is you decide on the levels. You use the tools of technical analysis so that you can manage your trades more efficiently.